Happy Friday, traders. It is 8:01 a.m. Chicago time on Friday, the 10th of April, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Fair amount of news overnight driving the trade. The Nikkei touched above 20,000, the 20,000 level for a fresh 15-year high. 15-year high. The Shanghai Composite closes above 4,000 for 7-year highs. Hang Seng finishes up 1.22%, briefly surging over 1% at the open before consolidating. If you have not looked at a chart of the Hang Seng, you might want to have a look. Daily chart. Nice froth and boiling over there. The Shanghai Composite again closed higher by almost 2%, following better than expected Chinese inflation data. UK February industrial production data misses expectations. The DAX is pushing all-time highs, drifting up on continuation of strong auto sales numbers in yesterday's close. Strong US close. The US dollar rally continues, putting pressure on the euro and the British pound, with the British pound approaching 5-year lows against the US dollar, while gilt yields rise on election jitters. So got some geopolitical action there from England, from the UK. Looking ahead, by the way, right now I think Fed's Lacker speaking still, so keep an eye out for that. Today, very light calendar. At noon, we have the U.S. Baker Hughes rig count. The rig count was at 1,028 last week. And we have U.S. monthly budget statement, which is a low tier number, expecting negative 43 billion. Again, U.S. Fed's Lacker speaking now on economic outlook in Florida. And then at 11:20, we have Fed's Kosher Lakota speaking in Minnesota. Let's switch gears here. I did not look at next week's calendar, but let's switch gears to what we've seen so far. Hopefully the stream is clear enough for you. Yesterday, very interesting action. Mainly, we were looking for, since the prior day, since the Fed day, I've been looking for a push towards 2090 and a quarter, and I retweeted my tweet from the past to set that up. But I was looking for a neutral day on Fed day at least, and then an eventual push to 2090 and a quarter, and I'd announced that I expect that over the next couple of days. And we hit that overnight, 2090.50 being the overnight high. 2090 quarter is the FOMC high on the push up. Those kinds of numbers, as I've said many times to stage 5 traders, that those numbers have memory. You want to keep the high, low, and the scene of the crime for major numbers like FOMC and NFP and so on. And that number's back in play today. The market's currently trading 2088.50. Yesterday, we had another one of those strong pushes on the open. It looked like a drive. It was more of an ORR type open with some driving behavior, but as I had expected, we got failure back into the range. It tested lower and then it drifted sideways for a while before breaking higher into the close, shifting the point of control to the high. The high from yesterday is not super weak, but weakish, with the point of control at the high of the range, portending further highs, which we did get overnight. Very choppy trade indeed, and probably very frustrating as well. Just remember, when you're trading, it's very, very easy to get sucked into the emotional aspect of things. Just keep an eye on that. Just be aware that you're trading a market that has free will, and it's a lot like getting angry at at an animal behaving in a certain way. You know, it's just it is what it is. You either align yourself with it or you get kicked. So it's very important to just keep that in mind. I see a lot of frustration on the stream from people who felt that the market should rally and it didn't. Well, it shouldn't do anything. And if you find yourself speaking about must, needs to, should, has to, those are fixed mindset words that do control your bias. And you want to avoid those words, or at least become aware of them and get rid of them, because they're habitual words. And so when you're speaking about trading, you consistently want to reinforce the linguistic idea of could, might, may, that sort of stuff, and that leaves the field open for you to change your mind when the market does say differently. Um, I know that seems like a very fine point. It doesn't really matter, but it's quite important to think in probabilities. It's one of the key differences between folks who actually make progress in their day-to-day practice of trading versus those who just float and kind of pass time. You have to keep an open mind as to what the market's doing, in addition to applying basic statistics and probabilities to what could happen, what thing could happen over another, and that's something that I've been pushing for years. Anyway, we've broken higher out of the MC range that we've been in. So we've been in a fairly tight MC range for the last couple weeks from the 25th onwards, since we put in this low, and we've broken higher by a little bit. I don't know if it'll break back in. In my opinion, this is likely to find responsive sellers early on. So my expectation is responsive selling back towards the back towards yesterday's range and back in and below the 2082 LVN. I believe the market's likely to retest a 76, 77 area from the top again. There is a fair amount of weak structure below. But we are in the upper, we have exceeded the upper high volume node here, and are trying to push out. So I'm looking for responsive selling back into 2070, about 2078, 2079. Actually 2078, 2077 is the area. I'm looking for it to come back and test this this long node here that we've left behind before continuing higher. And then other than that, we're templating the 25th and the 24th for targets. So the first target you'll see here is the 93, 96 quarter is the LVN, and then the big target up top is, or not the big, but the big target up top is 2101. That is the balance for this entire area up here as we work ourselves back up the range. Easier to see on the composite chart. This is a composite of everything that's happened from the 13th of February forward. And you could see, I talked about this yesterday, we tested that 2076 half area from below a couple times, could not close. We were just short of closing at it on, Wednesday. Yesterday we broke right through and we got to the MC point of control for this entire region, and so we're in this upper range. And while we're in this upper range, we're looking for 9250 next, and we want to see, is it able to get through that composite LVN to push through to the next high volume node. So remember, the market moves from balance to imbalance to balance to imbalance. So we've been in balance here since this break higher. We've been in balance for 2 days, and it's moving into imbalance into the next region. The market does have memory as far as where it has traded and the volume it has traded there. And so we're now in this upper node. So the question is, since it's unlikely that we would have responsive selling all the way through and break through back into this lower balance, it could happen, but it's not a high probability play. It's likely to pull back towards this big LVN here at 77, 76, 77, and then rotate back up. If not, then balance for today after yesterday's wider range than the prior 2 days. Yesterday's range was right on the edge of normal, 20.25 points. The first standard deviation of which is what we consider to be normal, is right here on this shown on this profile, 20.25, and it was right there. So, and then the volume itself was right in the point of control, right in line with what's expected. So not too much, a fairly steady climb here. I think it's a very deliberate climb, and and one that's likely to stick. So we're making our way back through this upper volume node right now. I'd like to get out of this area. It's getting kind of ugly and fairly boring actually to trade. So looking for for a push up and the continuation up to 21.10. Looking at other markets, the crude oil has pulled back to that high volume node that's the most accepted price that we've had to deal with for quite some time now. Crude oil is not only driven by supply and demand, it's also driven by the US dollar, and the US dollar is strong overnight. So we have this drop here, and it's trading what looks like a weak low. So I was expecting a pullback in crude, and I was expecting a push through to 55.09. It does not look ready for that. I still think it's in a corrective phase, so I think it still has some upside. But with the Iranian supply coming on the market and so on, it may take a while. But here, I was definitely looking for, and I still am looking for it to get back up through to 55.09 before the next rotation down. Crude oil's not done on the downside long term, but intermediate, I'm expecting it to push up. The Euro stocks broke higher. Let's see. The Euro stocks broke higher out of balance, and they continue to break higher yesterday. And here we go, still pushing higher. So again, the U.S. dollar influence on the euro has been very positive for equities in Europe. Look at this. This is the euro-U.S. dollar pair dropping. Anyway, that's all I had for you. I don't want to get cut off. I will leave you with those thoughts. Hopefully you're finding this useful. I want to remind you, as always, it is Friday. It's always good not to lose money while trading on any given day, but especially Friday. It has an extra influence or an extra impact on our confidence and emotional capital. So you want to make sure that you're not allowing the market to burn a hole in your pocket on a Friday. So contain your losses. Know that there isn't too much pushing this around today, and it's likely to just take a few moves, take a few rotations early, and go sideways for a while. Good luck today, and I'll catch you on Monday. Take care.